What if the world's biggest debtor could weaponize the world's newest money to erase its biggest problem? Today, we are diving deep into a wild, speculative scenario, a financial gambit that could wipe out America's national debt using crypto.
Take a look at this number, $37 trillion. It's what keeps economists and politicians up at night. And look, this isn't just some number on a spreadsheet. It's a massive structural vulnerability, a source of serious global anxiety, and really, it's the motive for the whole story we're about to tell.
And that leads us to the central, almost unbelievable question we're tackling today. Could the United States actually orchestrate a kind of default by deception, using the very architecture of digital finance to escape this mountain of debt? Well, let's find out.
Okay, so to really understand the heist, you have to understand the target. And this isn't just a big pile of money, it's an incredibly complex web of obligations that stretches across the entire globe.
So, who actually owns all this debt? You know, it's a common misconception. About 20% is money the government basically owes itself. Think Social Security funds. But a whopping 79% is held by the public, and that includes everyone from regular investors right here at home to foreign governments.
And that public part of the debt, it has huge international stakeholders. Japan, China, and the UK are the top 3 foreign creditors. What this means is that any big move the US makes on its debt doesn't just ripple through America, it sends absolute shockwaves across the entire global financial system.
So why would anyone even think about such a radical plan? Well, because the risks of doing nothing are just enormous. We're talking about interest payments that are now bigger than the defense budget, a government that has less and less room to respond to a crisis, and rivals like China holding significant financial leverage over the US. This is the pressure cooker that makes these kinds of extreme solutions thinkable.
So you've got the motive. Now let's look at the tools for the job. Over the last decade, we've seen this parallel financial system rise up, one that could, at least in theory, be used for this grand gamble.
Just look at this number. We're talking about the stablecoin market. At over $250 billion, these crypto tokens, which are pegged to assets like the US dollar, have become a really core part of how money moves around the world. Believe me, they are not a niche experiment anymore.
The giants in this space are Tether, or USDT, and Circle's USDC. And here is the absolutely crucial part. To keep their one-to-one peg with the dollar, they hold massive reserves of real-world assets. And guess what a big chunk of that is? U.S. Treasury bills. They are literally buying up U.S. debt to back their own digital dollars. Now, the second tool is even more direct: tokenized treasuries. We're seeing huge players like BlackRock and Franklin Templeton already turning U.S. government debt into digital tokens that live right on the blockchain. This makes trading faster, way more accessible, and it basically plugs traditional government debt directly into the crypto world. The plumbing is already in place.
Okay, so we have the target and we have the tools. But how would a heist like this actually work? Well, this is the playbook for a default by deception.
It really boils down to 3 incredibly audacious steps. First, you encourage a massive shift of US debt onto the blockchain, both through stablecoins and those tokenized treasuries we talked about. Second, once a huge chunk of it is in the crypto ecosystem, you pull the rug. You engineer a sudden, catastrophic market crash. And third, with all those digital tokens representing US debt now practically worthless, the Treasury steps back in with real dollars to buy it all back for pennies, effectively wiping trillions in liabilities right off the books.
So how would you even engineer a crash like that? Well, it would likely be a multi-pronged attack. A sudden, shocking announcement of crushing new regulations, the government and its allies yanking massive amounts of cash out of the market. And all of this would exploit the known fragility of the crypto ecosystem, where all these interconnected lending platforms can trigger a chain reaction of failures, and pure panic can spread in minutes, not days. And make no mistake, pulling this off wouldn't be a clean getaway. It would be a global economic earthquake with a ripple effect that would be absolutely devastating.
The immediate fallout would be just brutal. The contagion would rip through emerging markets that have really embraced crypto. Hedge funds with any exposure would face these cascading margin calls. And here's the crazy irony. As all those panicked stablecoin issuers are forced to sell their real treasury holdings to get cash, the yields on traditional US debt would spike, making it more expensive for the government to borrow.
But the geopolitical blowback, that would be even worse. An act of deception on this scale would completely shatter global trust.
China would have the perfect excuse to push its digital yuan as the new alternative to the dollar. You'd see European allies scrambling in emergency summits to de-risk from the US financial system. And pretty much everyone, friend and foe alike, would have a really good reason to start dumping their US debt, which could trigger the very crisis this whole gambit was meant to solve.
Okay, so the consequences are clearly catastrophic. Which brings us to the big question. Is any of this even remotely plausible, or is it a gamble that's just too big to ever really contemplate?
You know, as radical as this all sounds, the idea of a debt reset isn't actually new. Back in 1933, the U.S. went off the gold standard. In 1971, the Nixon shock ended the dollar's direct convertibility to gold. Both of those moves effectively devalued U.S. obligations to the rest of the world. This crypto gambit, it could just be the 21st century version of that very same playbook.
And this isn't just the fantasy. Experts are already pointing out these very vulnerabilities. Victor Zing over at the CFA Institute highlights that the link between stablecoins and treasuries is, in his words, fragile. A massive rush out of stablecoins could actually destabilize the market for U.S. government debt. So the weakness is very real.
But of course, the counterargument is just as powerful. Legal scholars warn that a move like this would be seen for exactly what it is: overt market manipulation. The reputational damage would be absolutely immense, and it would pretty much invite legal retaliation from every corner of the globe, potentially upending the entire financial order that the U.S. leads.
So where could all this lead? Well, in the best-case scenario, you get a clean buyback, where the U.S. saves trillions, but global trust is seriously damaged. The worst case? Contagion, which triggers a global recession and fast-tracks the move away from the dollar. And there's even this wild possibility of a crypto resistance, where the decentralized world fights back, leading to just pure chaos.
When you get right down to it, this whole thing boils down to one simple truth. It doesn't matter if you're talking about gold, paper dollars, or digital tokens on a blockchain. The entire global financial system is built on one thing: trust. That is the real currency.
And that leaves us with the final, haunting question. This entire speculative gambit rests on the idea of breaking trust for a massive short-term gain. But in a world that is built on confidence, can that trust ever truly be restored once it has been so deliberately and so catastrophically broken?